Welcome to Trading Lounge and the US indices for the 7th of September. So just looking at the S&P on the weekly chart here, one of the things here that we can look at is that when a market reaches an old high, it can do, it normally reacts in one way or another. Sometimes it will react before it gets there. Sometimes it reacts on when it gets there. Sometimes there's still good news and pushes a little bit higher in one way or another. But in one way, they all tend to react at old highs. So that's what we're seeing here at the moment. Okay, so we just need to be a little bit patient here. Yes, I understand. I mean, we use Elliott Wave, and other people are good at Elliott Wave as well. But I can see that, and people have shown me different counts from different folks, and that's all fine. And we all seem to have different counts, and yeah, so it makes it a little bit sort of tricky. So one of the things is that is this run to the upside here finished? Is that have we got a wave 5 in here, or do we have a wave 1 in here, or is this wave 5 still got further to go up here? All of these sorts of things we need to take on board and look at, and I know that from the low here to the current high here, there's many markets around the world that do have 5 waves up to that particular point. Bitcoin is one of them. We can just have a quick look at that for a moment. Where's Bitcoin? There's the Australian dollar. This is Bitcoin here. So from its March lows here, it's 1 and 2 and 3 and 4 and 5 here. This might be an A and a B and a C and finished here, but it's probably got more to it than that. There's the Australian dollar. In Australia, this is probably one of the best counts to the upside that I've seen. This is the resource sector in Australia, which is basically what's been moving our index. And here I can see we've got 1 and 2, 3, 4 and 5 here for wave 1, an A and a B and a C for wave 2 here. So 1 and 2 here, all the way up for 3 here in a nice 5-wave sequence. For wave 3 and 4 here, and going up for wave 5 here in terms of 1 and 2 and 3 and 4 and 5. So in this case, we're completed here, and we'll see some sort of ABC correction coming into play here for this. Okay, so in some cases we can see that I can see stocks in the US that are still pushing to the upside in their moves as well. If we have a look at some of the indices here for a moment, let me just get this up here. The S&P 500. This is the S&P 500 here. So we've all the Elliott people and whatnot have been counting all this in different ways. So we've got this really nice extension here on the S&P, but when we look at the S&P 400, that extension's not there in this case. And in fact, the S&P 400 is a little bit easier to count to the upside. We could count it up as 1 and 2 and 3 and 4 and 5 here for wave 1, ABC for wave 2. We could look at all of this as wave 3 here, wave 4 pulling back, but it does overlap here, and I wouldn't expect the S&P 400 to overlap at that point. So normally you would look at this as wave 1 to the upside, ABC for wave 2 here, then up for wave 1, back for wave 2, and then moving off. But we can see how lazy this is here for a third wave, a third of a third. It's really lazy here. And also counting this here too, it looks like we can count it as 1 and 2 here, 1, 2, 3, 4, 5 for the third wave, fourth wave and fifth wave here. So this is all like the third wave here for this, or we could, sorry, up to this point here, so 1 and 2 and 3 and 4 and 5 here, and completed there. And this is already, you know, the S&P 500 has moved lower from this point, where the S&P 400 is moved from this low here. So, you know, and also too, do we include this here as wave 1 and 2? The Dow Jones is a little bit the same as well. Let me find the comp or the thing here. So yeah, slightly different here. So in this case here, you know, we could count this as 5 waves up for here for 1 and 2 here, and then 3 and 4 here. Or we could count it up as 1 and 2 and 3 and 4 and 5 here for 1 and back for 2 here. But this little track up through here, you know, it's also facing its old highs over here. It's just covered the gap here as well. So we'd expect it to react here. And, you know, this could be counted here as 1 and 2 here quite nicely. And then 1 and 2 and 3 and 4 and 5. So we've got a third wave all the way up here. So they're all counting a little bit differently. They're all got their unique little pathways. But what we are seeing that's quite common, if I can just come back to this area through here. So when we got up to here, we talked about the market having a reaction. It just took an extra, you know, 2 weeks to get up there and pull back like this. But I think we just need to be a little bit patient here before we call anything in. Before we call the top in, we just need to gather a little bit more evidence. And that's what I really wanted to talk today about, is just gathering that evidence and staying with some. I mean, for me, I have to stay with something that I can see and I know and I can trust. So based on that, we're just going to go to, I'll just go to the hourly chart actually. We can come back and look at a count later if you like. But so where we were, we're not in a trade at the moment. We traded from here and we got out up here at this top here, so that was a little bit of luck and nice job and all the rest of it. So then we started counting down through here. So we had one, and well, I counted this one as an A and a B and a C wave down to this point here, and also looked at it, you know, rallying to a wave 4 and down to a wave 5. So we got 5 waves down here now for this, right? So this is important. So we'll just relabel this in here for this. When we counted 3 waves down here for this, the NASDAQ had already had 5 waves down. So when we talked about it before, we had this down with 3 waves and the NASDAQ down with 5 waves. And we'll look at the NASI too in a moment. But if we've got 5 waves down here, for instance, then we're going to get a rally off the low here. So in that instance, we can look at it like that. Well, that's nice. That comes right in on that 3,500, that level there, and there's the 50% there. Not that it has to reach there, but that's just our starting point. So it does look like we've got a little 5 waves up here. So the 61.8% will be roughly back down on that other level there, so we'll just pop that in there. I'll just take a bit of liberty here for that. And yeah, so as it stands at the moment, we do have 5 waves down here. That means that we can have an A wave, and that normally comes up into the supply zone, into this space here. It may or may not be finished, but I'll just assume for it is there. And then we'll pull back for a B wave here, and then a C wave up here that may or may not reach up here. We've got the old high here, so I'll just take it into group 2 here, 65, 72 and 80, and then we'll come down again from that point. We'll have 5 waves down, much the same. Well, it could be anything really, but we'll just take this here, copy that and pop that over there. So we can look at the market coming down to this point here. Now I'm just labeling this here as an ABC pattern here for this, right? But you know, if there is the top of the market in, well then this is going to be a wave 2 here, for instance. So this is stuff that we know and we can work with, right? So we can copy that. So that means that when the B wave comes down here, then we can look to use to short that, but don't short it when it comes down here for any reason. We want the market to move back up and then we can put it in. We could also short the market from this box here as well. So we'll turn that green. Now, if it's just a B wave here, then the C wave will come down and that will be the end of it, and that will be in 5 waves. Now, what you need to be mindful of here is that that's the A wave and the C wave are the same length, but the C wave can also be 61.8% of this length here as well. So it may just come down to, say, this point, or it maybe just even to the other low over here for this. So just put that in there roughly. So it can come anywhere down here. One of the things that that we can also look at as well is the angle of things, because when we look at an ABC correction, the market goes up, and then normally the A wave comes down really sharp, and this is really sharp. This has come down sharp here. And that's typical of an A wave. And then the B wave will be whatever it is, and the C wave is normally on more of an angle. We've talked about this many times, but so depending on where this is here, if we see the C wave coming down here has got the same angle or roughly the same angle as wave A here, then it's likely that we've got wave 2 in place and we'll go down for wave 3 at that point, right? So the angle of this here in relationship to the wave A here is, well, it's its personality and it's critical. So that's something that we'll keep an eye on. So we can, now that we know that we've got 5 waves here, that means that after 5 waves, we're going to get a correction, and then we're going to get another 5 waves down. So that's really where we are here. So our short trades can go from shorting within group 2 here, and we could also, once it develops a little bit, once this B wave is in here, we can also take this low here, come through to the B wave here, and come through here as well. And when we find this level here, this angle here as the resistance, then we can also short as well. And just as we use a classic trading levels pattern for going long and short and those sort of things, it's the same principle as well. So if we've got this line through here, where you want to get your timing right, and it just takes a bit of practice and skill, the market will come down, hit it, and because it's a trend line, and it will then eventually go through, and then it will go back and test it again, and then that gives you your reference point low at that point. Now, also what you've got to be a little bit mindful of, it doesn't happen often, but it does happen enough for you to be aware about. It will come down and have a second retest if you haven't got the count right, and then come down again like that. So you just need to be a little bit mindful of that. So this is the safest setup here, and then if there is a second one here, if you're not too shaken up, then you can also short again at that point there. Obviously you can short at any time you want within a particular process, as long as you know what you're doing and where you are in that process. So looking at this 5-wave structure here, on the NASDAQ, we looked at it here in this way. We were looking at wave 1 and 2 here, and we counted 5 waves, did all our little homework and got 5 waves out of this, and then looked for wave 4 and wave 5 here. So once again, we've got 5 waves down here, and we're looking at this coming back up to this block here is the first resistance, of course, and then the other block will be up into this space here, because markets just mirror itself based on where activity was played out. So this is just mirroring itself over here, and we'll see some sort of, this is a tick chart I can't draw here, but we're looking at an A and a B and a C coming back to the 61.8% mark, and then going up for wave C here. So we could also put this box in green now. It's not that you have to put a full trade in here, you know, less is more. Now the thing here is that for whatever reasons, if this low is breached, we need to be short at that point. So, well, we'll just put that in there, and that's the same with the S&P 500 as well. You could probably get a better fit than that, because obviously this market's going to, if this doesn't occur, it's going to cascade down further at this point. But look, this is a very clear five-wave structure from the high, and we need to work out, just put everything else aside in terms of, oh, this is a wave 4, or there's a top in place, and all those things, because we don't know that for sure, right? But what we do know is we know that we have 5 waves here, and this is where our trade, this is our space, this is where we're trading, this is where we're playing. So let's just stay with this, and within due course we will know what we need to do, and where we're going, and so on and so on. So our job is to short from here, and the same thing here. We can also draw a line through here as well when the B wave comes in, that low there, so you can do that as well. So many roads to Rome, so tick chart won't draw through there. Yeah, so that's it really on that basis there. And here too, we want to short this. Let's just we want to short this too, just in case this market comes straight down through here for whatever reasons. This may be whatever, I won't go into it to confuse things, but if that gets breached, then we're wrong, and we need to make money when we're wrong. We need to make money when we're right as well. Now that would be a nice thought. I think that's all I really wanted to say at this particular point. So we're thinking that in terms of the counts, we're thinking that in one way or another, this is a degree of wave 4 here, playing out across the top of the 3,500, the old high. And it may get more complicated than this as well, more complicated than an A and a B and a C wave here. In fact, this 3-wave structure may just be the A wave from that point too. It may grow in size, so we could just copy that and put this here, and then still have a B wave up here somewhere. So it's not over yet with all of this. But one of the main points here, as I mentioned before, is the angle of this here. So if we see this on a lazy angle compared to wave A here, then we'll know that we're in we're in corrective mode there, and it'll help us with our buying at this point here as well. So I think I'll just leave it at that for today. Yeah, because my mission was really just to bring our attention not to the bigger picture, but to the smaller picture in here. This is enough work to do within this particular space here for this. Alrighty, thanks for tuning in. Much appreciated. Cheers.